Hello and welcome everyone. Welcome back to our SBL series. And today what we are going to do is we are going to do a detailed discussion on what often gets overlooked in the SBL exam in terms of the syllabus topic, which is the public sector governance and the three sector business environment. Today, we'll talk about how leadership also plays a critical role when it comes to public sector entities and what role do they have to play in the overall organization. Now, the modern businesses, so to say, they operate in I could classify them into three sectors, so to say. One would be the private sector, one would be of course the public sector, and then of course there's a third sector which is the not for profit sector, and that is going to be the main focus of our discussion right now. In And why is it important for your SBL exam? Because in the SBL paper, it's not only about private companies and shareholders, but examiners want you to understand how businesses interact with government bodies, regulators, and even how not for profit organizations function. In fact, real world business leaders often find themselves working with all the three sectors: private, public, and the third sector, which is the not for profit sector. And it's not just the compliance part, but we'll have to understand public private partnerships. How does that impact your corporate social responsibility? Is your leadership style supposed to be different when you shift from one type of organization to another? So quite a critical topic when it comes to our exam. Let's start with an understanding of the three sector model. The private sector, the one that you are most familiar with, companies owned by private individuals and shareholders whose main purpose has to be wealth maximization, profit maximization, and performance is measured by profitability. Now think of companies like Reliance India or Infosys or global companies like Apple and Amazon. All of them are in the private sector. The public sector, these are government owned organizations providing essential services that cannot or should not be left to private entities, like Indian Railways, your public hospitals, and schools, all of these. And their purpose is not profit, but their purpose is to provide those critical goods and services which are necessary for the functioning of the economy. And I said a specific line that these should not be left to private entities, because private entities will come in with a capitalist mindset wherein they would want to make the maximum possible money, highest possible profits. But certain services like healthcare are for social welfare. Not everyone would be able to afford the high priced medical services in private hospitals. So for them, it is necessary that government also operates its own set of healthcare centers and hospitals, so that the interests of the common general public is taken care of. Otherwise, if profit were the sole objective, then treatment for other individuals would become a very difficult task. And then, of course, you have your third sector, which is the not for profit sector. These are voluntary organizations filling gaps that have been left by the other two sectors. I mean, think of an NGO like Akshay Patra in India. It runs midday meal schemes. You have that's basically for bridging. When I say they are bridging the gap, government is not able to do everything because, government has limited resources. In a country like India, the private sector is focused solely on profit, so they might not care so much about it. So, who is most concerned is so the problem is that government can't do everything, private sector won't do everything, so people would voluntarily come together and make sure that certain specific issues that are close to them, like a hunger eradication or free healthcare. So these not-for-profit organizations, these NGOs, so to say, they will perform the job of ensuring that certain basic necessities are provided to private individuals also. Organizations like Red Cross, I mean, that's an international body, and their success is measured not by money, but by social impact. Now, if a question in the exam, it concerns about partnerships, community engagement, or government regulation, you will have to think about, or you will have to think through all the three sectors, not just the private sector. The public sector organizations at their very heart are unique because they are not like commercial enterprises. They don't rely on market sales for revenue. They are mainly funded by taxation. I mean, think about the National Highway Authority of India. The National Highway Authority of India is a public sector organization whose job is to construct highways in the country. It's an infrastructure company. Now, they don't collect money from people who are traveling on the roads. I mean, they do collect toll tax, which is a nominal charge for, using the highway or for using, the high quality road. But the main funding, when you are constructing such a long highway, naturally, there are going to be lakhs and crores of rupees involved. Not all of that money can be recovered by way of toll that is collected from individuals. So what they do is they rely on taxes. I mean, the direct and indirect taxes that we pay, they are used to fund these projects. Their role is to deliver essential services. I mean, it could be security, infrastructure, healthcare, education, identity systems, welfare schemes. I mean, Aadhaar, the concept, which is, your unique identification number concept in India. The Ayushman Bharat scheme, these are examples of massive public sector initiatives that touch millions of citizens. Things like the Ujjwala Yojana, you and I might not need it, because most of us live in urban centers. So, things like LPG gas and, all of these are, we take these things for granted that they are there, everybody gets it. But imagine people who are living in the interiors of the country, they don't have access to clean cooking facilities like the LPG gas, for example. So how do you make sure that the LPG gas reaches them? It's through these Ujjwala Yojanas and, all of these schemes, which of course they will need money, they will need investment, they are not coming for free. And how is that getting funded? You cannot charge the marginalized sections for that, so that money is coming out of our taxes. But because they don't have shareholder or profit pressure, governance is more complex. See, the ultimate people who can hold the public sector organizations to account are people like you and me. We have given our hard earned money in the form of taxes to the government, and the government has promised to use that money in XYZ ways. When the government has promised to do that, at the end of the year, like we ask the company, a private sector company in which we have made an investment, we have every right to ask the government that where was the money spent, how many households were touched, and what all facilities did you provide. We are the principals, you and the government is the agent. And we have items like, say, for example, the Right to Information Act in India, through which we can get information about these projects, about these activities. And so, because government servants will are not accountable to us in the same way a private sector company is, it creates a gap in governance. And this is something, this governance gap, this lack of accountability or lack of having that mechanism where the information can get reported, this can be a question in the SBL exam. Now, when we are understanding the public sector, you should know that we are looking at how the government functions. And the government has basically four main organs, or four main hands through which it performs its functions. The first one is the legislature, where the law is made. So our Lok Sabha and Rajya Sabha, the Parliament of India, that is where the law is made. And these people who sit in the parliament, who represent us, they are also called lawmakers or legislators. Say today you want to pass a bill regarding reservation of women at workplaces, then that matter is taken up in the form of a bill in the parliament. Both houses of parliament discuss it, and then once the bill is passed, it becomes a reality. It becomes the law of the land. In the United Kingdom, they also have their own parliament. They have the House of Commons and the House of Lords. So it differs from country to country, but that is the legislature arm of the government. Then you have the executive. It implements and enforces public policies. For example, Ministry of Finance rolling out GST, or US Department of Health implementing pandemic related policies. The executive wing is the doer. They are actually executing the government orders across the country. Think of the network of your civil servants and public servants, your IAS and IPS officers who are running the country. That is the executive branch. Then you have the judiciary, which is, say, if somebody has a problem with the way the executive branch is working, then they will go, or somebody has a problem with the interpretation of law which was made in parliament, they will go to the judiciary. These are independent courts which ensure laws are being upheld. They are protecting the rights of individuals. I mean, Indian Supreme Court, it gives out a ruling on, say, environmental regulations. Then, see, when it does that, there could be a law, say the Environmental Protection Act, and there is a company which has been accused of non-compliance, then the company will file a case against the government of India, or the government of India will file a case against the company with respect to this non-compliance. The matter will be taken up in court. The court will read the law, which the government and the private company are not able to interpret in the right way. The government will apply the judiciary will apply its understanding, and it will give out a ruling which will then be binding. And the secretariat is the day to day machinery: police, military, hospitals, schools, and administrative offices. That's the fourth part which of the system which carries out your day to day activities. So, executive, the ones who are doing it; legislature, the lawmakers; judiciary, the interpreters of law and the ones who are applying the law; and then the secretariat. All of these are working together in order to ensure that the government and the economy as a whole are functioning properly. Now, why do we say that in the public sector there is a lot of complexity when it comes to stakeholder relationships? See, in private companies, the primary stakeholder is the shareholder. Easy to identify. You know what exactly are the shareholders looking out for, so you can deliver to them what exactly do they want. They want growth of wealth, they want profit maximization, they want it, and you deliver it. In public sector, it is complex. Why? Because government sets resource allocation and policies. The civil servants implement those policies. The service users are citizens who use these government schools, hospitals, or public transport, and the taxpayers are funding everything, but they might not agree with how funds are spent. I mean, take subsidies in India. Taxpayers may question free electricity schemes while beneficiaries welcome them. Both are valid perspectives, and the government must balance that out, which is why the balancing act in public sector becomes difficult. I mean, take the example of free electricity. I mean, the taxpayers are saying that, you are using our money. Why are you using it for providing free electricity? Why can't you use that for, construction of roads? So the ones who are funding everything might have a different perspective. They might have a different expectation in terms of how their funds should be used. But the government, which is basically, the which is at the helm of everything, might believe that infrastructure of roads is not so important, healthcare is more important, or they might feel that electricity provision is more important, and they might divert the resources there. Now the taxpayers are spread across the length and the breadth of the country, so taking everyone's opinion into account is not possible. At least in case of a private limited company, or a private company, all the shareholders vote in the annual general meeting, so you know what they want. You cannot do that. You cannot get the taxpayers to vote on certain matters. So the ones who are funding, they have no control over resource allocation. That is done by the government. The government allocates the resources, but who implements these policies? The civil servants, your IAS, IPS officers, who are, basically responsible for running the show. They are the ones who are implementing the policies. And service users are the citizens who use schools and hospitals and transport facilities. These are private individuals like you and me. And these private individuals are now, they are the ones who are the ultimate beneficiaries. So funding is done by taxpayers. That money the government decides how to use, but the civil servants are actually the ones who are running the show on the ground, and the ultimate service users are like a completely different party. Now, all of them would have different expectations, and managing that would be a tightrope walk. In your SBL exam, I think examiners love it when you show awareness of conflicting stakeholder interest and you suggest a mechanism to manage them, to balance them out together. Now, the definition of what tantamounts to good performance, and and the act of measuring that performance in the public sector, I think those are independent challenges in their own right. Now, why does the public sector often lag behind the private sector in performance? I mean, think of a hospital like, say, the Kokilaben Ambani Hospital, which is a private sector hospital, and think of a public sector hospital. Right from hygiene, right from attentiveness to patients, right from correct diagnosis and overall mortality rates. Which one do you think would be doing a better job? I mean, I agree with the fact that the Kokilaben Ambani Hospital charges a good amount of money, but it also provides very good healthcare, which is a private sector hospital. And the government sector or the public sector, it is running its own thing in the form of government hospitals. And there, the performance levels might not be that high. Right from basic issues like hygiene, I think that particular sector will have its own challenges. Now, the reason is, see, the government has 50 different things where it is expected to allocate funds. Now, if the allocation of funds to the healthcare sector is inadequate, to the government hospitals is inadequate, naturally the quality of services there is going to suffer. But on the other hand, if you contrast that with a private hospital, the private hospital directly bills you. I mean, they charge an exorbitant amount and then they provide you service against that. See, if a department overspends, then taxpayers have to bail it out. Next year, you will have Nirmala increasing the tax rates again. And in case of a government hospital, there is no fear of closure, okay? But there is always a fear that the services might not be of the highest quality. So, uh, there are two things here that you need to keep in mind. One, the quality of services might not be as high, but a government sector or a public sector entity will never face the fear of, closure. It will never face the challenge of, what if we don't have enough money to pay salaries tomorrow? They don't have to worry. They don't have, like sales targets like private hospitals have. You would be surprised to know private hospitals act very much like a sales machinery. Okay. They act like, think of a mall. A private sector hospital is a mall because they want to recover the investment. They want to pay their advertising. They want to pay salaries of their staff. They want to pay for all these good looking facilities. So they are going to charge it from you. And if not, if they are not able to do it, if they are not able to recover the money, a private sector hospital could fear closure. That is not going to happen in the government sector because there is funding security. The government will always pay for it, right? Now, there are certain services, say for example, where the public sector has a monopoly. It could be, getting your passports. That function has not been outsourced. I mean, the passport centers are run by TCS, but TCS is an administrator. The entire mechanism is still with the government of India. Or services like tax collection that is done through private banks, like HDFC Bank also helps the government in tax collection. It charges a fee to the government, but ultimately the service of tax collection or the service of passport is provided by the government of India. Okay. And then there are free service usages. When services are free at the point of use, like public hospitals, demand can skyrocket, leading to inefficiency and strain. I mean, we saw that during COVID times, the number of people flocking government hospitals because services there were for free. I think that puts so much strain because like everybody is making a beeline to avail those services. Okay, then governments worldwide are trying to address this performance management issue through KPIs, through benchmarking and audits. What is benchmarking? Comparing that with a gold standard and striving to work towards that, establishing key performance indicators. And in India, the government launched the performance monitoring and evaluation system to measure ministry effectiveness. I mean, I haven't used it, I haven't seen it, but yes, I have heard about it. And in your SBL exam, if you are asked about improving governance, you could propose performance frameworks like KPIs, benchmarkings, and independent audits that would form a decent part of your answer. And that is, exactly what your examiner is looking out for. Now, the third sector, which is basically the non-governmental organizations, they are doing the job of filling the gap or filling the void left by the government sector on one hand, it is the public sector on one hand, and the private sector on the other hand. See, private sector is capitalist, private sector is looking out for cash, private sector is looking out for profits and wealth. Government sector, as much as it could want to do, always keeps on complaining about lack of adequate resources, how they are they don't have enough cash because the tax revenues are not that high, and the government will not be able to serve all these needs of healthcare and poverty and poverty eradication and all of that. And this is exactly where the NGOs or the non-governmental organizations come into picture. I mean, think of the Akshay Patra Foundation that I mentioned earlier. It is there, it provides free meals to millions of school children. And there's a charity called Oxfam, which works globally to fight poverty. Greenpeace focuses on climate change and environmental activism. These are independent organizations, non-partisan, and funded mainly by donations. Okay. They are not aligned. So it's not like they are connected with BJP or they are connected with Congress. They are not aligned that way, but they are ultimately going to serve the society. What the public sector could not do, they will do. Their purpose is not private benefit, their purpose is the greater public good. But how do you measure their success? Unlike private firms, you cannot look at profit or ROI. The focus is on impact, which is harder to quantify. Okay. And how will you see anything that is given for free? The public in general doesn't value it. So even if Akshay Patra Foundation in India provides free meals to children, I'm sure there are some Fufajis and some uncles sitting somewhere, oh my, saying, oh, the vegetable today wasn't very tasty or whatever, or it was too spicy or it was too bland, not realizing the fact that the non-governmental organization is actually trying to help them. They will come up, with these nagging issues, and that could be one reason, why measuring performance would be that much more difficult. I mean, we spoke about Oxfam, we spoke about Greenpeace. I mean, Red Cross it's not aligned with any country. Red Cross is for providing medical aid and assistance specifically to, when a war takes place, when an armed conflict takes place. I mean, what is happening in Gaza, what is happening in Ukraine, what is happening in so many countries of the world, unfortunately, the International Red Cross will provide medical assistance and help to those people who are impacted because of the armed conflict and violence between the two countries. So that is where the Red Cross steps in. Now, the performance measurement in the non-governmental sector, the performance measurement is tricky. Why? Because how do you identify or how do you work on the metric? A metric is a parameter which is helped to judge performance. Like my performance could be judged on pass percentage. Another organization's performance, which is, say, for example, say you are talking about the customer care department of Airtel. So there, the success could be measured using number of calls received or number of complaints logged in versus the number of complaints successfully resolved within the given amount of time. So you have a very clear metric that is, that can be established, a clear parameter that can be established to decide whether you are doing it successfully or whether you are doing it properly or not. And then, of course, you can suggest measures for performance. But saying that I want to reduce poverty is such a vague, Instagramish way of saying things that, I want to reduce poverty. How do you define poverty? What do you mean by reduction of poverty? Who is sitting there measuring it? Have the lives of people been alleviated, and has that been has that been pushed to the next level? Are you trying to remove people out of poverty by giving them jobs and income generating opportunities? And over how much period of time are you going to achieve that? Well, because removing poverty is not like removing a broken tooth, right? It is not something that will happen overnight. It will take time. Or saying things like, what, we are working towards saving forest. But what do you mean by saving forest? Are you going to reduce the deforestation? Are you going to do tree plantation and do afforestation? How do you define that? And then causation complexity. Outcomes take years and may involve many external factors. There was something I heard a very long time ago, that the government of Maharashtra was trying to rehabilitate people who are living in Dharavi, which is one of the biggest slums in the world, so to say. Not something to be proud of. Our overpopulation is the reason behind it, but they were trying to build affordable accommodations for these slum dwellers. Now the news that I heard was, when the government gave them these livable houses, residential accommodation. These slum dwellers, they gave that accommodation on rent to other people, and they went back and they continued to stay in slums. So it's not that the government is not trying to help, it's that the mentality is very different that way. And in US, you have organizations like Charity Watch, or in India, you have FCRA compliance mechanisms which assess the NGOs by efficiency. What percentage of funds actually goes to programs versus admin cost? Now, in exams, if the case involves NGOs, which it can be, the entire pre-scene can be on an NGO, for example, then you'll have to suggest efficiency ratios, independent audits, donor reporting, and impact assessment when it comes to measurement of performance. Now, when it comes to the public sector, what are the objectives? What are the strategic objectives in the public sector, and how are they interconnected? See, unlike the private companies that set independent goals, public sector bodies must align with government policy. Now, you cannot have the Ministry of road transport working in a different working on its own tangent, and the Ministry of Finance having a completely different outlook. Now, what the Ministry of Finance is going to allocate funds, and the Ministry of Road Transport is actually going to construct roads using that. Now think about it. If the Ministry of Road Transport makes a decision that this is the amount of, or this is the length of highways that we want to construct, and they start the work, but they don't have resource allocation from the government, then that entire project goes to bust, right? It doesn't lead to anything. Or a state health department may want more hospitals, but if the national government wants to shift on digital healthcare, then priorities will be different. Now, political changes make this even more volatile. A change in state government can alter the focus from infrastructure to welfare schemes overnight. And I mean, we have seen that happen when the governments change, the approach changes. We have a prime minister right now who criticizes the NREGA and MANREGA schemes launched by the UPA government. Now, tomorrow, I mean, if some other government comes in, they will criticize the schemes made by this government and not let it function. So, of course, challenges are there along the way. And see, public sector strategies are shaped by politics also. They are shaped by public opinion also, not just by internal management. Now, how do you ensure that the governance in public sector follows the basic governance principles? There are, I would say, three foundation stones on which you can base that. One is you cannot have accountability created overnight. But there is a board of directors who will manage the daily operations, the board of governors or trustees who provide oversight, holding these managers accountable. And then there is the public accountability, which happens through transparency, election, and audits. The Comptroller and Auditor General of India, C and AG. I mean, you will find their offices in almost all the big cities. They ensure that public money is spent effectively, and there through the Comptroller and Auditor General of India offices, the C&AG offices, you can get a detailed report on where all was the money raised from, like from which sources of in taxation was the money raised, and how was it spent in an effective manner. And the Right to Information Act, RTI Act, basically gives you the power to ask these questions to the government and hold the government responsible. In your exams, if public sector governance is concerned, you could suggest governance layers like independent oversight boards, audits, and citizen transparency mechanisms. I mean, these could be some of the tools that you could suggest in your answer. Now, democratic control and political influence. See, a democratic society is where everyone votes, and then, based on the public mandate, certain decisions are taken. Now, how do you execute that in a country like India? See, all of us cannot get down and fight and debate and come to a conclusion through meetings on a daily basis. The way shareholders of a company cannot participate in the day-to-day running of the business, and they appoint the directors to run the company on their behalf, you and I have appointed people who will represent us in parliament and work on our behalf, who will vote on our behalf. Okay. Information disclosure through government websites is something, once items are, see, we have put our representatives in the parliament. Now whatever decisions are made in the parliament, these decisions, this information is disclosed to us through government websites and press conference. Then you will need public consultation on major decisions. And see, that's not something which they do through like a direct online voting. That's not what they do. But in certain cases, they might go for a public referendum. When the United Kingdom wanted to exit the European Union, they conducted a referendum. Like everybody voted on that, and based on the public opinion, and of course, it was guided ably by the by the government authorities, that facilitated exit of the United Kingdom from the European Union. And private individuals also have the right to get an understanding of how exactly was their money spent. So they have provided money to the government, and they can ask questions about how exactly their money was spent. The taxpayer money, it was utilized for which all purposes. They can ask it, they can seek that information, get that information through Right to Information Act. Now, it's in all evolving or evolved economies, you have provisions similar to the RTI Act. And the Open Government Partnerships covering 75 countries promotes participatory governance. And in your exam scenarios, if it is a public sector setup and if the governance failures appear, then recommend stronger transparency measures like right to information, open consultations, having, independent auditors, independent watchdogs, all of that will help. And transparency is the very foundation of having an effective government mechanism. And you cannot not focus on these aspects, because the public will demand answers. The public would want to know where exactly is the money used. And through this governance mechanism, through transparency, through Right to Information Act, you can at least make sure that this information is relayed to the public in a timely and democratic manner. Okay, now we'll talk about the teamwork governance failures, which is an interesting case study in this aspect. Now, the Teamwork project in Northeast England demonstrates critical governance failures in public-private partnerships. This brownfield redevelopment of a former steel land involved a joint venture between public body South East Development Corporation and private investors. This was meant to be a 50-50 partnership, and it was. See, taxpayers bore all the risk while private investors gained most of the benefits. Oversight was compromised, approvals were bypassed, and transparency was almost non existent. I mean, while your study text mentions the teamwork, or your study hub mentions the teamwork governance failure, where a public private partnership failed on account of lack of accountability, lack of transparency, and the public oversight function failed in a major way. But you can see that in India also. Na? We have seen controversies in public private partnership projects. I mean, a lot of metros in India run on the PPP model, where governance gaps led to losses for the public in general, also because they did not get the services they were promised, and private partners also suffered. You can use this to highlight the in exam, you can use these examples to highlight that it is critical to have independent oversight. What is oversight? And oversight, like you have an invigilator in the exams. Similar, what he does is he keeps an eye on you. Just because of the fact that he is present, a lot of people are deterred from cheating. So that is an independent oversight function. And which is why, an oversight function is required along with proper documentation and transparency. Now, compromised oversight is, as we discussed, the invigilators were not present who would look at these items specifically. They bypassed cabinet approval. Because it was a public-private partnership, the public element was the government authorities, the parliament. There were significant lapses there. Approvals were not taken from the cabinet at the right time, and there was excessive delegation. Unelected chief executives received broad powers to act on behalf of democratically elected mayors, compounding oversight problem. See, the government needs to keep the reins in its hands. If everything is outsourced, if everything goes into the hands of, private individuals who are not even appointed for that particular capacity, then of course all hell will break loose. Lack of proper documentation and freedom of information requests being denied in these situations led to further issues. I mean, think about it. The Right to Information Act applies to the government sector. It might not apply in the same manner to a public private partnership. And individuals are demanding that, individuals are demanding certain information. Either that information is not provided, or you don't feel yourself, or you don't feel that you are accountable in the same way, because right now it's not just the government, it's the, I mean, the private sector is also involved, and private sector might not be covered by the Right to Information Act, and that itself will create problems. In today's day and age, when we talk about the government sector, the public sector, I mean, political influence and lobbying play a very important role. Today, and this is not something which is good, by the way, huh? How they influence the overall functioning is, now think about a situation that a road construction contract has to be given for a particular village. Now, the government opens a tender. Now, because of, say, there are multiple contractors who will apply in the tender, and ideally the government should evaluate the bid and then allocate the tender to the most deserving candidate. But what happens is, because of nepotism, because of vested interests, because somebody has bribed a government official, or somebody is a relative or a friend of an influential person, these people, they gain access to these projects, they get these projects to execute, and they might not be delivering the best quality. In my opinion, it's okay if you go for lobbying, it's okay if you do a little bit of corruption. That's not an ideal thing, but at least get the work done. Here, there is corruption, there is bribery, all of these things are happening, but the final output is that the public in general is not getting anything. Now, all of these activities, ultimately they spoil the basic purpose for which a public sector organization is even there in the first place. Like running public campaigns to influence voting outcomes. Because people might want to vote for a particular candidate, but through these activities, you are trying to influence them, or you are trying to influence a particular smaller community or different communities into voting for a particular candidate. Then, providing finance for their campaign activities. See, once you provide finance for their campaign activities, see, that doesn't come for free. Even a loudspeaker, if you want to hire, that loudspeaker also costs you. So naturally, yeah, when you are getting these activities done, you need money for a campaign, and if a donor provides you that money, naturally he will expect something in return, correct? So these activities are legitimate, but there are negative impacts, because once you help a particular political party win an election, then it's but fair that you expect something in return, and that in a way can spoil the entire narrative for the government and the public sector, because then you are not fulfilling the basic role that you have come in for, and you are only supporting one particular group or one particular or you're only supporting those who gave you funding. You are not really looking at it uh, you're not really looking at it from a public welfare perspective. With all of these complaints and challenges with the public sector, I think the trend for privatization started in the 1980s, 1990s. In India, of course, it started in the 1990s. Privatization is selling off a stake of a publicly owned enterprise, or selling off a stake of a government owned entity to the private sector. This process fundamentally transforms the organizational culture, because see, with private sector comes more accountability. You are answerable to someone, which is not the case, when you are the government. What are the advantages? Uh, of privatization? There is efficiency, there is access to private capital, of course political interference is way less, and these are some things that work in your favor. There is way more efficiency. But then, see, a private sector entity is a very capitalist entity. It will focus on wealth maximization, it will focus on profits, and private and individuals or the population in general might get exploited because they might not be able to afford the items provided by this entity. Now imagine a government hospital has a restriction on price on what it can charge to the patients. Go to a Kokilaben Ambani hospital and you will end up spending lakhs in a day also. So not everybody can afford that. But because now the government control is not there, you cannot control the prices beyond a point. The government will lose control over essential services, and the focus will be short term profit and not overall public welfare. Now, in India, privatization of Air India, I mean, you can think about that as an example, or in UK, privatization of British Telecom. See, if privatization is a point in the exam, you will have to evaluate pros and cons. Don't just give a one-sided answer. What you could do is, in order to convert a public sector entity, in order to privatize that, either you could sell the assets to private entities, typically through an auction process, and then the private sector entity carries on the operations, or you could list the company, convert a state-owned enterprise into a publicly owned enterprise, like say State Bank of India. State Bank of India, I wouldn't, it's a nationalized bank, of course, but now its shares are also listed on the stock exchange. So people like you and me are also owners in a company like State Bank of India. So they are not answerable just to the government, they are answerable to us also, because now the shares are listed on the stock exchange. There are individual investors, there are institutional investors, all demanding answers. Now, not every sector can be privatized. You cannot privatize defense, you cannot privatize prison systems, you cannot privatize atomic energy. I mean, these are risky systems or risky areas to privatize per se. Now, see, their enhanced efficiency, improved access to private capital is there, reduced political interference, and if the government is going through the asset sale route, then naturally the government will get a one-time revenue. The disadvantages are also pretty clear. Strategic services may require state control, and a private sector entity might not have the depth of understanding to tackle this problem. There could be potential consumer exploitation that we discussed, and the focus could be on short term profits, thereby damaging the entire reason of creating these entities in the first place. The performance measurement in the public sector again focuses on the three E's, which is basically economy, efficiency, and effectiveness. Economy is, being cost conscious, delivering things on a budget. Efficiency is doing the or giving the best possible output at the minimum possible price. That is maximizing output from the given resource input, so efficiency in utilization of resources, making the best possible use of resources. And effectiveness is basically achieving the stated objectives. So if your objective was treating 100 patients in a day for or giving them a medicine, in tackling 100 patients in a day, if you achieve that target, that is, you are effective. If you achieve that within the given amount of resources, you try to deliver more, that is efficiency. And economy is basically delivering required services on a budget, making sure that there are no budgetary overruns. And of course, some of the key takeaways from the public sector governance discussion are that, of course, there is a lot of complexity when it comes to stakeholders. We saw in detail how that particular aspect works. We had to understand that there are 4 or 5 different components, and each one of them, they are not necessarily going to be aligned with each other. If they are not aligned with each other, then it creates an even more complex situation. And when it comes to being answerable, when it comes to creating a democratic accountability, because there are no shareholders that way. There's no one to ask questions, and that is why accountability might take a backseat. And then, of course, if you want to ensure performance excellence, you have to focus on the three E's, which is economy, efficiency, and effectiveness.